good morning. Happy Friday. Thank you so much, each and every one of you, for joining us this Friday, the 21st of August, on yet another fantastic episode of our weekly youth webinars powered by Co-Bank. It's always a pleasure being back here with you every Friday at 11 a.m. My name is Violet Angena, your host. Now, today is our 28th episode, and of course, I have to start by appreciating each and every one of you who's been part of our online community. Tunasema asante sana, and we do hope the conversations have been impactful to you. And just in case today is your first time here, first of all, karibu sana, and just know that you can catch up on all the fantastic conversations that we have had so far. All you have to do is to go back to our social media platforms. We are Co-Bank Kenya on Facebook, Instagram, YouTube, and X as well, and you will be able to catch up on all our fantastic conversations. Now, today, kama kawaida, we do have another powerful topic for you, and it's all about home ownership unlocked. Today, we do want to break down all matters mortgages. And let's be honest, as a young person, uko hapo tu in your 20s, when you think about owning a home, I know we all have the dream of living in a nice place. Pengine umeingia pale Pinterest, ukachagua ta nyumba ambao ungetaka kuishi, or maybe when you're driving around town, you've gone to the leafy suburbs, the outskirts, umeona a very nice home, and you're like, well, I wish I could live there. Lakini, when you look at the price for that house, then you think about what we call mortgages, then there's deposit, then there's interest. You just give up, unachana tu na hiyo story, you continue wishful thinking. But today, we do want to show you that you can actually own a home, and we do want to make matters mortgages very simple and understandable for you. And the person that will be breaking down this topic for us is none other than Ivan Mwangi, who is a mortgage specialist and a real estate investment expert. Good morning, Ivan.
Good morning.
How are you?
I'm well, thank you.
Umeamua leo vijana wanunue manyumba.
Itabidi wanunue manyumba.
All right, so just start by introducing yourself deeper. Najua nimekupatia tu ile ya surface level intro. Just go deeper and tell us what you do.
Thank you very much, Gina, and thanks for having me. My name is Ivan Mwangi. I work with Co-Bank, and I sit at Mortgage Finance, where we do mortgage business. And in this case, I am the current acting head for Little Mortgage. At the Mortgage Finance, we have four segments, where we have the retail segment, which I'm currently heading. And the retail segment is where we are dealing with customers who are salaried.
Right.
Customers who are in MSMEs, the micro, small enterprises, the businesses that we have around.
Okay.
And I feel like most of the young people are in that business.
Yes.
They are either salaried or they are in the micro enterprises.
Right.
We also have another segment for the corporate mortgages, where we are dealing with now corporate entities. The developers that you see, the developer that will find, you will go buy a house from now one single unit.
Yeah.
The person now who is doing the whole units, it's the one we do at corporate.
Okay.
We also do cooperatives, that is the circles that we have around. We bank them and also finance them, the mortgage propositions that we have within ourselves. We also have now a technical department.
Okay.
Now, when you talk of technical, it's, we call it the projects team.
Okay.
These are experts in matters construction.
All right.
They will be looking at now the documents that we look at when we are financing someone for construction.
Right.
I know we will get into it
Yes.
in terms of the construction requirements.
Yes.
So, and again, we have now the other segment, which is the property hub.
All right.
Now, the property hub is dealing with property sales. So we have a segment where we have vetted properties, nice properties within the bank. Bank has done its due diligence and knows that these are good properties that people can invest in.
Right.
So we are connecting now the buyer with the property seller.
All right.
So we also deal with selling of those properties.
Right.
These are mainly for these developers that we've financed.
Okay.
So we are sure of the properties being good for, someone purchasing them.
Right.
So thank you
And
very
this
much.
morning, you are determined to make us understand mortgages.
Sure.
All right, so you know we speak to a lot of young people here every Friday. Na kuna mtu tayari ameingia hapa akasikia mortgage, hiyo si topic yangu, acha niende nitarudi next Friday when the topic is for the youth. Is that the right way to approach it? Is it a conversation for older people, ama tu kijana akiwa in their 20s ndo anaanza kazi yake ya kwanza, ama ndo amepata promotion mahali? Is this a right time to understand mortgages, ama ngoje miaka songe kidogo aingie kwa hii chat?
It is the right time.
All right.
Because when you're young, you have a lot of time.
Okay.
If we're saying a mortgage is for a longer period, then it means if you're old, you might not qualify for that facility. So the younger you are, the better for you, because you're able to, get into it, and you'll have a lot of time to repay, to do so many things.
So the earlier the better.
The earlier the better.
Right. So we are going to dive deep into that conversation, and kama kawaida, you know, we like to make this as engaging as possible. So you as a young person, hebu tuambie, what is standing between you and that house that you want to own? Kama kuna nyumba mahali umeiona and you're like, I really want to live in this house. Ni nini inafanya usiishi kwa hiyo nyumba saizi? Just tell us your honest feedback. We'll be more than happy to sample it as we continue the conversation. Lakini pia kumbuka, we want to hear your questions. If there's anything about mortgages hujaelewa, kama kuna explanation unataka to repeat, ask us those questions. And Ivan is here for you today to make sure that every single thing about mortgages and home ownership is understood by the young people. So what we are going to do, tutanzia tu hapo tops. What is a mortgage?
Yeah.
Explain that to us. Yani in simple language, mortgage ni nini?
Mortgage, it's just a facility that we give. It's a loan, of course, a loan that we give you towards ownership of property. And the property we mean land. It can be land. It can be you want to construct a house. You want to buy a house that is already constructed. It can go into buying an office. It can go into an investment apartment. It can go into even warehouses for the youths who are doing businesses. So even a church, kama kuna muyutapo ni pastor, bado tutamnulia. So basically, it is just towards, it's a facility we use towards ownership of property. In this case, what we mean is that the security for this mortgage will be a title deed. So the title deed is the key here, not any other kind of security.
Hapa kuna logbook.
Logbook hakuna hapo kwa mortgage. Ikiwa ni logbook, it's not a mortgage. So the mortgage, what really comes into your mind when you hear mortgage, is a title deed. So you are owning a property. You own land, you own a plot, you own a house, you construct on a property that you already own. So all that we do it under mortgage finance. A
warehouse.
Yes, we
can
can
go down.
It's all day.
Bora kitu yenye security yake ni title deed.
Yes.
That is what we are calling a mortgage.
Yes.
So at what point ni nini unafaa kuangalia ndio ikuambie you're ready to even now start thinking about going to take a mortgage? I was about to ask you, is there a specific age? But then I'm not too sure kama ni kitu ya age at this point. So what are those factors that you'll tick on your box that will tell you, you know what, now you qualify to start having a conversation around a mortgage?
Most important is your income.
Okay.
So do I have an income that I can commit towards paying the mortgage facility?
Right.
So that is, if you're in business, we are looking at your turnover, the cash flows from your businesses, and at the end of it all, what's your profit margin? You can have cash flows, but you don't have the profit. The profit is maybe very minimal because maybe you're starting up or something. So we're looking at what is your profit. When you look at your profit, after you do all the expenses, there are expenses that you have in your businesses. What is the net that you get? Now, from that net, do I have income that I can commit towards ownership of a house, towards the payment of a facility? The other person is the salaried person.
Tusizimix, tuanze na mtu wa salary.
Okay.
Alafu tuingie kwa business. Unajua wewe ni expert. So let's just start with mtu wako job.
Yes.
A youth ameanza kazi. Huyu si mtu wa informal wa biashara, huu ni a salaried person. Ni nini unaangalia around you ndio kuqualify to start having a conversation around mortgages for a salaried person?
Good. So you have some salary.
Income.
So this is what we call gross pay.
Yes.
Ile umeambiwa, hii ndio tutakuwa tunakulipa.
Yes.
But after that, there are deductions that come with the statutory deductions that are governed. So then what you need to consider is what is your net pay. Ile net
yenye
inaingia kwa account after the obligations that you are deducted. And again, number two, do you have other commitments elsewhere? So you have maybe a chama, you have a SACCO loan payment, whatever it is, you need also to consider that.
Okay.
So that now you are getting into this is my net pay. But apart from the deductions by the government and all other things, this is now getting into it. What are other commitments that I have?
Right.
I'm paying rent somewhere.
Yeah.
What is that cost of that rent? Now I get into down asking myself, have I saved enough? Do I have funds for emergency? If you don't have, then you need to build up that before even you start
Savings.
thinking of a mortgage.
Mortgage. All right.
Now, the mortgage will, if you're buying a house
Yeah.
or anything that you're investing in, there is a cost to ownership of that. Apart from you getting the loan, there will be some costs. So ask yourself, what are the all costs that will be involved by buying this property?
Yeah.
So the cost, but again, if I've saved some money, is there some deposit I'm going to give in? So if there is also some money you feel like I don't want to put in to get 100% financing, I can put in my deposit. Some cash that I've saved in. How much is this?
Right.
Then at the end of it all, do I have a good credit history? So have I been paying my facilities well? Or do I owe some people, and in my credit report, then there are issues.
Okay.
So I need to look at all that before I even think of getting
a mortgage. All right.
Yes.
So we rewind that. Umesema uangalie income yako na income yenye inabaki after deductions zile za kawaida za government zimefanywa. So what you're left with as your net pay.
Yes.
You look at that. Alafu uangalie kama uko na mahali unalipa sako mahali chama zingine. What is left after that? You check what you've saved.
Yes.
Savings zako.
Yes.
Costs that come with buying that property you're going for.
Yes.
Na your credit history.
Yeah. And just additionally, for that salary person, how secure is my job? Like, am I in a contract? If I'm in contract, then what is the contract? What are the contract terms?
All right.
Do I want to get into a facility which I will be paying after maybe my contract expires and maybe the employer might not renew the contract?
Right.
So you're looking at that.
Job
so
security.
How secure is my job?
Okay.
And additionally, just to add on one point, after in case something happens, I lose my job, or anything, will I be able to continue financing the loan that I got?
Right.
So it is also very good to look at, in case of anything, how safe am I?
All right. Good. So kama uko kwa contract, you don't advise kwa sababu your contract ina expire.
We advise within the contract period.
Okay.
Yes, that is the most important thing.
All right.
But sometimes, even exceptionally, if you have renewed your contract maybe 3-4 times, you know, the employers will say, no, we just hire on contract.
On contract,
So if you've been able to renew that and we can see some consistency, we also consider.
Right.
So it doesn't really push you away from coming for that facility.
Right. Yeah. So what if I'm not on contract, lakini hii kazi nimefanya tu miezi mbili. It's just, yes, I have a salary, I'm on permanent employment, but it's just for 2 months or 3. Is it too soon? Ama ningoje kidogo?
I would say it is too soon.
Okay.
Because you're still on probation. You see, you're given a probation for 6 months.
Yes.
So we would expect that at least complete that probation period and get a PNP where you are permanent and pensionable, or the contract is very clear that this is the period we're giving you.
All right.
So that you are able to manage your finances. You are sure of this is the tenor that I can get in terms of my salary. So I can commit this salary because I know how long I'll be in this employment.
Right.
Yeah.
Is there a too kidogo salary? Because, you know, as a startup, entry level, you start kidogo as you build up. Kuna mahali mtu ameanza na 20k, mwingine ameanza na 25, then kidogo kidogo umeenda 50, then at some point you're at 70, ama mwingine ameanza na 100. You understand? So is there, unaweza ambia mtu, hii, ngoja kidogo, work, build, keep moving, alafu kifika like this level, you can start having that conversation. Ndio kesho si wote tusikuje kukutafuta tutakwambia tupekujia mortgage. What would you advise your salary wise?
Okay.
Upime aje?
Okay, we don't have a scale.
Okay.
The issue here is, what am I earning? Okay.
Yes.
And what am I looking at?
Yeah.
I could be looking at a property worth maybe 1 million, which is dilapidated and I want to renovate it and get in. I would be looking at a property maybe 2 million, 3 million. So depending on the property you're looking at and the repayment that I'll give you, that's when I'm able to advise you to tell you for this kind of an amount that you're looking for, you might not qualify today.
Okay.
Or you need to raise some deposits. So we allow everyone to come to us and we advise each depending on their priorities and what they are looking for.
All right.
So we don't really say that because I'm earning this, I can't really qualify. Yes.
So it depends on the property also.
The property and the cost. You see, how much am I looking for? Am I looking for 1 million, you might find, I know we'll get into it, the repayment amount.
Yes.
Where you might find you have a salary of 50,000 and yes, you can be able to be financed a product maybe of 2 million or so.
Okay, all right.
So
great.
It doesn't matter the salary.
Okay.
What matters is what am I willing to commit towards paying the loan.
All right, and that is something you can advise a young person on.
Yes,
akikuja kwako, si ndio?
All
right, good. So tumeelewa mtu wa salary, what they need to tick in their boxes, so that now they know I'm ready for a mortgage conversation. So tuende kwa a business person. Huyu ni photographer, huyu ni makeup artist, huyu ni musician, anangoja gigs akaperform alipwe. Huyu ni mtu wa garage mahali. So this person who's not on a salary consistent that is coming in at the end of every month, what are their considerations?
Good. So we usually advise for any business customer, number one is have your monies banked in a bank. So everything that you earn in your business, ensure that it's going through a bank account.
So
we have channels so that allows you, we call it a Co-operative, a pay bill, a till number. Have those and have the money coming to the bank. Because what we look at is the cash flows from a business. You're saying you are in garage business. Where is this money going to? You paid every day. So the monies that come in, yes, it's not your profit, but it's cash flow. That cash flow is what we are looking at. Because at the end of it, we can be able to say, this is your average per month. So we are saying, this is what I earn monthly in terms of cash flows. Then from those cash flows, we say, this is my cost of doing business. After we say this is the cost of doing business, then we'll say this is my gross profit as a business person. I know everyone who is in business, they are doing that. They know this is my gross. Then after that, we get to, just the way we were getting to the pay slip, we are now getting into what are the other costs, expenses for business. Have I hired someone? What is their salary? What costs, other costs, expenses that come in the business? Am I paying taxes? Consider the taxes. Eventually, we will get to what is my net income. So when we get to the net income, then we compare it with the same thing we were saying, what is your net pay as a salary person? And we get into asking you now, this is your net pay. I mean, the net, we call net income from your business. So from that net income now, how much am I willing to commit? Do I have the other commitments, chamas? Now, have I saved for my emergencies? Do I want to raise some deposit towards whatever I want on? So all those considerations, we put them from either business angle or the salary side. But the most important thing is, if you are in business, ensure that all your business income is banked in a bank account, so that we are able to get to see what is this that comes in through your business. So whether it is business you are getting maybe payments twice a month, twice a week, we will consider all businesses. Bora we have the turnovers with ourselves or with a bank account.
So mnaweza expect hii business ikuwe imerun for how long before now we can have that conversation? Kwa sababu naweza kuwa nimefungua biashara 2 months ago ama last week na niko hapo tayari, I want to have a mortgage conversation. So which is the ideal time? Hii business ikuwe imerun for how long ndio mkuwe comfortable enough for that conversation?
Ideally, number one, the business needs to have broken even. So break-even period for one business will be different from another. But basically, we advise a customer maybe to have run the business for 3 years. Also, we could maybe have run it for 2 years and you're sure of your incomes. But the most ideal for any business person, when you want to get into debts with banks, have the business run for at least 3 years. That is when you are sure of this is my net income. Otherwise, when it's too early, you might collapse your business by getting into debts.
Yes. Good. So now we want to understand, how much can I borrow as a young person? And as you do that, tuambie hii mortgage na wakaji, should I come to you kama nisha identify nyumba? Let's say it's someone who wants to buy a house, because here we are talking about home ownership, right? So either I'm buying a house, an apartment. So do I need to go identify that house first? Nione ni this house is 10 million. Ndo nikuja kwa bank niseme nataka mortgage, nime-identify nyumba, niambieni niombe how much? Ama naweza kuja kama hata sijajua property. How does it work? Ndo nijue how much I can borrow as a young person, how much the mortgage is.
We can still get back to your net pay and other commitments. When you get there, wewe unaweza kuwa maybe you have an idea of how much you can commit in your mind. Unasema maybe net pay yangu ni 50k. Na najua from this 50k, 25k naweza i-commit kwa loan. So That is one. So you'd maybe approach the bank and ask them, from this, I'm interested in purchasing a property or constructing a house for my own residential purposes. And I want to commit about 25K. How much could I qualify
as mortgage?
As a mortgage? That is one way. The other person would go and fetch a property and they will come to us and tell us, I have seen a property be sold at 3 million and I want to buy that property. These are my finances. So when you visit the branch, any branch of Co-bank, you find a business banker or a personal banker, depends on what you're doing, maybe you're salaried or you're in business. And then they will review what you bring. Now you bring either, if you're in business, the bank statement.
Yes.
If you're in salary, your payslip. And now from your payslip, we'll be able to advise you that this is the match you qualify for. Now, yes, maybe you identified a property of 3 million, but you come to the bank and maybe you qualify for 2 million. So it is for you now to decide, do I still want to go on with this property for 3 million?
Yeah.
And if I have to go for this 3 million property, it means the bank is only financing me
2 million.
Meaning I have to chip in from my pocket, and that's why we are talking of the savings. This is now becomes your deposit towards owning that property. Yeah.
So nikiona property, let's say at 10 million, and me, I'm like, I really want this house. It's 10 million. And maybe the bank, wakifanya mahesabu yao and how much I'm willing to commit, you can only be able to give me 5 million. You inamaanisha, would you encourage me to go on if that's the deal? And if yes, does that mean say your 5 million ingine ya juu ndo yo mimi nitahave kulipa hiyo?
Sasa, I would encourage you if you have enough savings and enough deposit.
Okay.
So it means you've been saving towards home ownership for some time. Okay? You've saved enough and you feel I have 5 million. So that's why I'm going for a property worth 10 million, noting that I also don't qualify in terms of my incomes for that much.
Yeah.
So if that's the case, I would advise you, yes. But if you come to me and you don't have that saving, I would tell you, kindly consider a property within this range. Because what we are saying, we're still young, right? Today I might buy a studio apartment just to ensure that maybe I'm within the city. I don't want to keep paying rent. So I just own a studio.
Yeah.
But I have a dream home in the future. So I will own this for now. As I build my capital, I build the savings. As my income increases, the moment I'll be coming again to the bank, I'll be qualifying for a higher amount, which will help me now get into a better property.
Right.
And this one that I already bought, it's mine.
Yeah.
So I can rent it out or I can sell it and it will have appreciated. So it's very good for
so in case nikuje na ambitions ziko juu sana, mnaweza nishukisha chini kidogo, mnaambia hapa hii hesabu niko hujapiga vizuri sana, why don't you try get a house? But that's dependent on savings zako pia.
Yes, yani what are your priorities?
Yes.
How much have you saved up?
Yeah.
So it is dependent on everything from you,
right.
But we'll give you an advice so that you don't get into a debt that is not good. Because there are good debts and there are bad debts.
Right. So when do you finance someone 100%? Because that is also an option, sindio? Mimi sina savings na sina pesa ya kulipa deposit. Nataka munipe your 10 million in totality. What do I need ndo ni qualify for 100% financing?
Thank you. Currently we have a product known as KMRC. KMRC is a product where now we can be able to finance you up to 100% when you're purchasing a house. So you're purchasing a house and it's for residential purposes. That's very important. So you're not purchasing maybe to do business. So mostly you're purchasing this once for your own residential living.
Right.
Now I'll finance you 100%. And 100% means if it costs 3 million, I'm financing you 3 million. If it costs 5 million, I'm financing you up to the 5 million.
Right.
But the question is, do you qualify for the same? So we'll be looking at your finances. If you qualify, then that's when we do 100% financing. And now this product is a very nice product, noting that it's a product at 9.5% interest rate. I know we have not gotten interest rate, but the 9.5% is a very good rate in the market. And in fact, if you're buying a property within the property hub that I mentioned, within the bank's property hub, I'll give that at 9%, discounted rate of 9%. Now, when we talk of the KMRC again, I am giving you a very long tenure. We said we are youths, bado tuko na time. So tuko age iko tu sawa. So nakupatia up to 25 years.
to pay
the
Right.
facility pole pole.
Yeah.
Doesn't mean you necessarily need to pay with the 25 years.
Right.
It will depend on what you want yourself. Maybe you want a lesser period, or you can be chipping in and paying that loan kidogo kidogo, because the
Right.
loan is on something we call reducing balance. I know
Yeah.
we will get into
We'll
that.
get there. Yeah.
So that KMRC product is the best product for us. We can consider incomes. If you're married, your income and your spouse's income. So we can combine two incomes,
yeah.
and consider you towards owning a property.
And if you're not married?
If you're not married, then we'll just consider you are single.
Okay. All right. Na kuna limit ya how much that house should be, because umesema kama nyumba ni 3 million mtanipea 3 million yote, 5 million mtanipea yote, kama ni 20 million still, or is there kuna cap?
So this KMRC facility, of course, it has its own limitations. Maximum loan amount yenye naweza kupatia ni 10.5 million. I think most youths would that is a good property, 10.5.
Yeah.
But if you want a property which is more expensive, I can give you the loan will be up to 10.5. But the property value now ikifanywa valuation kama ni nyumba ama ni shamba na nyumba, the maximum property value will be 15 million.
Okay.
So which means if you are getting a property worth 15 million, then I would finance you 10.5, then you get the deposit of 15 million less 10.5, which is 4.5.
Right.
That will be your deposit.
Right.
Now this KMRC product, you can use it to buy a house. That is one. A ready house, apartment, a bungalow, a mansionette, you can buy.
Yeah.
That is very ready.
Yeah.
You can also use it to buy land and build. So I can buy for you a plot and construct at the same time.
Right.
So we'll finance you the purchasing and the construction bit, both of them. Then we also finance you to construct on a property you already own. Kuna wale wako na title deed saa hizi. Maybe hajaanza kujenga kwa tu na title, but ako na dream, anataka kujenga.
Does that still remain your 10.5? Bora isipite 10.5. Inclusive of the land.
Yes.
Kama unanunua land pia.
Yes.
All right. Good. So that's when you're able to finance someone 100%. So ukinunua nyumba, you can buy the house. So kuna mtu ananunua residential, apartment, sindio? Kuna mtu ananunua apartment, kuna mtu ananunua standalone, sindio? Kuna mtu pengine ni office. Is there a time frame zenye mnapeananga? Kama ni apartment, haifai kupitisha miaka hizi kama hujamaliza kulipa. Kama ni nyumba standalone, haifai kupitisha, or it's flexible. There's no like a structure per se.
So
how does that work?
Within the KMRC, we mentioned it is specifically for residential. It can be an apartment, can be buying and building, and it can be a ready house.
Yeah.
And it can be just construction.
Yeah.
So for those who are salaried, wenye wako na mshahara, because salary is a bit limiting, because we remember we are working with the net pay.
Right.
So we'll give them a tenure of up to 300 months. 300 months ni 25 years. Yes.
Okay.
So tunaweza kupatia up to 25 years for repayment if you are salaried.
Right.
If you're in business, we'll give you up to 12 years.
Okay.
12 years for business people. The business is a bit volatile, so you can get, so 12 years for business.
Right. And for those who are not in the KMRC, it's now a house that is more than 10.5. Do they also have limits?
Yes. For now, if you want to do a commercial house, maybe a rental house, you want to do some bed sitters. Worth at 5 million. Now those ones are not considered residential because siwa unaishi. It's a commercial property.
Airbnb pia?
Yes. Kama unataka kufanya warehouse, ufanye biashara, that is treated as a commercial property. It's for business. So that one will give you a maximum of 120 months, it's 10 years for you to repay the mortgage facility.
For a commercial, nyumba yenye unaenda kufanyia
biashara. Yes.
Okay. Na kama si ya kufanyia biashara naishi hapo?
Yenye unaishi hapo ndo tunaita residential. Residential tukasema hiyo tunakupatia kama uko kwa business 12 years. Kama uko kwa salary up to 25 years.
But nikiweza kumaliza before 25 years ni sawa? Okay, good. All right. Asante, so far tumeelewa how that is working. So let's come down to the deposit. All right. If I'm not getting the 100% financing because probably I don't qualify for the 10.5 million, maybe what I want is higher. How is this deposit calculated? Who calculates it? Ama ni mimi naeza enda nione nyumba, it's 15 million na niseme mimi deposit yenye naweza ekelea hapa ni 2 million. I'm the one to decide, or is it the one selling me the house, or is it the bank who calculates the deposit?
Well, number one, as I mentioned, if it's bank financing, and I told you you qualify for 10 million. Let's get down maybe for the youth. Let's say 3 million property. A 3 million property is there. We will get even within our what we have within the bank. We have 1 bedrooms in Rongai going for 3.5. We have even a 3 bedroom in Kisaju going for 3.5. So yes, there are studios. I know you could qualify for such.
Yeah.
So if I told you that you're qualifying for 3 million in the bank, and you want a property now worth 3.5, then it's clear that the difference between the price of the property and the loan amount that I'm giving you will become your deposit. Now, sometimes when you go out there are people who are selling properties and they are very categorical. They are telling you, for me to sign a sales agreement with you, then you need to put in a deposit of 10%. So that one is set out by that person who is selling to you. So that person could set out and tell you, yes, I accept mortgage financing, but for me, I really need you to commit. So the deposit is your commitment towards owning that property. And that commitment can be set out by your sales agreement, or it can be set out by you because you saved up to 2 million and you want a 3 million house. So if I have saved that much towards owning my property, then I can set out and say, this is what I want to commit towards the loan.
So does it mean bank itanipea from the calculation of the bank? Okay. Naomba turudi nyuma kidogo. So let's say the house is 3 million.
Yes.
Now, mimi kama kijana,
yes,
you've assessed me, yes, my income, I qualify for 2.5.
Yes.
2.5 million. Sindio? So inamaanisha hii ya juu 500,000 is my deposit. This is what I'll pay the homeowner.
Yes, the vendor.
The one selling me the house. Yes. Na hiyo pesa umesema pia yeye anaweza niekea deposit yake?
Si anakuwekea deposit ni yani yeye kama
anaweza niitisha deposit yenye anataka.
Now, if you look at that, the property is 3 million.
Yeah.
10% of that ni 300,000.
Oh. Oh.
Basically, okay, mostly they will ask for that, like a 10% deposit, which will be on the sales agreement. So basically, yes, if they tell you this is the much you need to deposit, then you will deposit that to them. But now, the much you are depositing would depend on how much do you qualify for in the bank. If you qualify for 2.5, then it means even if the vendor was telling you you need to do 10%, utaf kuongezea.
Yeah, so that's what I'm saying. So hapa akinitisha, so let's see if the house is 3 million, alafu tena uyo vendor anitishe 10%. So ni 300,000.
Yes.
So inamaanisha in total I'll give them 800,000.
No. What we are saying is your deposit. Yani the loan una qualify kwa bank ni 2.5.
Yes.
Kwa sawa hadi hapo? So ulienda kwa vendor akakwambia nauza 3 million.
Yes.
Si ni kweli?
Yeah.
So yeye akakwambia mimi unafaa at least unipe 10%. So 10% kwake ni
300.
But because bank ilikwambia una qualify for 2.5, inamaanisha you will have to top up 200,000 kwa vendor ndio uko umemlipa like the 500, ndio bank nayo imulipe the 2.5.
Okay.
Umenielewa?
Yeah.
Yes.
So mimi ndo nitapatia vendor the 500.
Yes. What happens is if you're buying a property, we will pay the vendor directly the loan amount that you
borrow. 2.5. Amta nipea nimpe.
Tunaelewa wewe ni youth, so unaweza
amua nende kwanza na diani
kidogo alafu nyingine.
So you give hiyo 2.5 mnampea yeye directly.
Tunaekea the vendor. And we expect before tumwekee wewe utakuwa ushamlipa deposit yako.
Hii 500 na yeye nisianze story. Ni mwekeni kwanza alafu mimi nitaweka yangu.
You need to prove, and it is very important also, as you pay, don't pay cash. Usiende upeane pesa cash. Ensure that it's a bank transaction. Traceable. You have a slip to show that this transaction really happened.
Yeah.
Because even if there will be some other issues in the future, you are able to verify the transaction through documents. So anytime you're paying for anything, ensure it is something that you have a slip. It is, and ensure that maybe it's going through the right channel like the bank, where you can have a statement to prove that really I paid this person.
The
You
bank,
can deposit
yeah.
to the bank or you can do a bank transfer. They're better.
Na ukifanya M-Pesa payment, kama
M-Pesa
iko within
payment,
the limits.
okay, M-Pesa you could do because you will have at least an M-Pesa
Traceability.
statement.
Okay, all right.
Yes, yes.
Okay, so first ni kwanza mimi ndo nilipe hiyo deposit, alafu nyinyi mlipe hiyo 2.5 directly to the vendor.
Yes.
How long will it take? Mkishaangalia makaratasi yangu muone niko sawa, tumeagree, I qualify for 2.5, nishapeana 500,000, is it instant?
I think we are getting deep into mortgage now. Because now the mortgage process is like this. First we'll get an approval. Tukwambie you qualify for 2.5.
Yeah.
We approve. After we request now for the documents, the pay slips, we'll ask for several documents.
Yeah.
But it's documents that are available.
Yeah.
Si vitu zenye utaenda ati kukosa kupata.
Yeah.
So if I approve for you a mortgage, now tell you I have approved. It means now it's when I'm telling you go and pay deposit. So you don't pay the deposit without having an approval from the bank. A signed offer. Where you sign an offer with you telling you umeapproviwa hii amount. So tukisha kuapprovia loan, sasa unaweza endelea kulipa hata deposit.
Okay.
But now there is a process. Remember it's a title deed we are dealing with here.
Yeah.
So we also need to consider that price. Kunauziwa 3 million. Is that property really worth 3 million?
3 million.
Okay.
Oh, okay.
So we will do some valuation. Valuation of that property.
On whose cost?
It's
on whose cost?
On your cost.
Mine.
Yes. So when we are talking of, we will get back there. Just to maybe we should just start from there before even we get to after I approve what are the processes.
Yeah.
Now, for you to own a house.
Yes.
For you to own a plot. For you to construct a house.
Yeah.
The cost is not just the mortgage, the loan.
Yeah.
All right.
Yeah.
There are other costs that are involved. And when you're targeting buying a property, you need to think of all the costs that will be involved with that financing.
Yeah.
So if I want to buy a house, what are the other costs involved? Kwa sababu nimenunua nyumba, yes. For me to get the title deed, lazima kukuwe na kitu inaitwa transfer.
Yeah.
Ilikuwa kwa jina yangu na it is coming to Ivan Mwangi. So for it to come to me, there is that cost. There's a transaction that will go there. So there is something we call legal costs. Hapo kuna wakili, kuna kitu tunaita other costs like stamp duty. Hiyo unalipa serikali. For any transfer that is done, you must pay for stamp duty.
Okay.
So there is the stamp duty cost. For me to know that this property is worth 3 million, I don't just wake up. Someone doesn't just wake up and sell at 3 million.
Yeah.
So the bank will need to value that property.
Okay.
Get a professional opinion on the value, the actual value of that property. So that's a valuation cost.
Yeah.
So we are at cost number 3. If I own that property, I will need insurance for life for me in case I pass on and I have a mortgage within the bank. Do people come to sell that property? No. So I need to have insurance on that property. That is life. Okay. Again, in case it burns, kuna moto, kuna flooding, kuna natural calamities. Is it covered? And so there is fire and life insurance. So that is the insurance bit of it. Yeah. If I also do some deposit, that's some cost for me.
Additional.
Yes.
So it will be more than the 500,000.
No. Yes. Now it will be the deposit plus
the other cost.
All other costs involved.
So mtu asidhanie ni hiyo 500,000 peke yake. So so now when all that process hiyo kuvalue huwa inachukua muda gani ndo ukue now ready to give the money to the vendor?
Now at least umejua kuna cost.
Nimejua kuna vitu na they are mine.
Yes.
Okay.
So after sasa tumesha approve loan, you will sign an offer to accept that yes, I am accepting the bank's terms on this loan. Okay. So you accept the offer. We usually give you 14 days or that. It depends with how soon you want it. So the sooner you sign, the better. So after you accept the offer, now that's when you start counting the time. We will do valuation of that property through a bank's appointed valuer. Yeah. So that will take between 7 and 14 days for them to visit the property, do photos and whatever georeferencing and everything to ensure that this property is actually good for the bank to finance. Okay. Then after that, you sign that, we will get now to the transferring bit of it.
Okay.
Hiyo ni the legal bit.
Okay.
Depending on where it is, kuna, it's the location, the county. Yeah. So it might take between 45 days, that legal process, up to 90 days. Depending on where it is.
Okay.
So it's a process.
Okay.
So
Clearly.
we will do that process. After we are done with that legal process, now it's when we will pay the money
to the vendor. Great. So I want to look at some questions online in like a minute or so, but before we get there, there's always a thing. Okay, sasa kama nanunua hii nyumba na niachwe nikilipa bank 25 years, si niendelee tu kulipa rent. Isn't this just another form of rent that I'm paying to the bank? That makes people think, what's the point of a mortgage then? Because nalipa bank rent, yenye ningekuwa nalipa landlord.
Now, well, we can't say that renting is a bad thing, and we cannot say that a mortgage is also a bad thing. The question is, what are your priorities today?
Right.
What are my priorities? Am I looking into a stable house, I mean a home where I can be living at? Maybe I'm doing business. I'm sure I'll be in Nairobi doing business for maybe the rest of my life, or even if I have to do other business, other places, most of the times I'm in Nairobi, or whatever it is, the place that you are in. So if that's the thing, do I really need to pay rent, or do I need to just own a home where I can be sure that this is my property? So that is one priority. So if that is your priority, then what kind of a house are you looking at? You know, those things that we mentioned earlier. But the issue is, in this case, am I better off renting, or am I better off owning something? Why owning? Because if I own it, you can consider maybe hii rent unalipa pale ni kama yenye utakuwa unalipa mortgage. And by the way, that's what you need to consider very importantly. How much rent am I paying? I'm paying 20,000. If I want to buy a studio apartment, how much will I be paying? Maybe the same 20K.
Yeah.
So which is better? The money getting in someone's pocket, and it's not sorting you out in any way.
Yeah.
Or you getting to pay the bank and owning something.
The home is yours.
It is yours.
So the peace of mind should come with knowing you're paying, but it's yours.
It is yours.
It is yours.
Yes. But now again, if I'm employed and I'm moving around, maybe I'm not yet stable. I'm not feeling like I'm very much stable. I could say, rent out today as I save towards owning a property at a future date.
Right.
Because I know at that time I will be able to stabilize. And again, I will have raised enough cash towards owning my own home.
Okay.
Yes.
So there were some times you had said there are certain packages you'll get only if the house is for residential. So what if I take a residential home, to me agree, we've done all those things, alafu somewhere along the way, niamue kuirentisha. I don't live there. I move out to somewhere else. Do you follow up?
Yes. Okay. We usually conduct visits to our customers.
Okay. Kuja kwangu bila kuniambia.
Si kwa nyumba. Sana kama ni wa biashara tuna visit. But basically some of those things are maybe out of our control.
Okay.
But still it will be, maybe, remember when you are buying it is a residential house. So it should basically be for that
residential. So it's not allowed to change along the way. All right, good. So let's look at some of the questions online. It's a very technical topic, but we are happy so far. Unaifanya tuielewe. I'm almost buying a house here in this conversation. Alice pale anauliza, can interest rates increase after I've already taken a mortgage? Okay. Wacha tuone swali nyingine. Thank you so much, Alice, for being with us this morning na kuuliza maswali ya interest rates and whether they can change. Alafu pia kunaulizwa, how can I calculate the total cost of my mortgage before applying? Hiyo mlisema mnatufanyia, si ndio? All right. So I can see a lot of questions are coming with the interest thing. So I'm going to allow you first to talk about interest and then we answer those questions. Alafu naona Andrew pia anauliza, if I work in a microfinance bank where my pay point is the microfinance bank, can I benefit from the mortgage product? Okay, Andrew, good question. Naona una smile hapo, hiyo najua uko na answer ingine moto sana. Trevor anauliza, is it possible that the loan can construct an apartment? Then the bank takes some percentage of the rental for a certain duration of time, especially when you finish repayment. Okay, good. So I think we can start with these ones that are not touching necessarily on interest. Ndio sasa nikupatie chance ya explain interest vizuri. Mumo pia alikuwa anauliza, just a quick one, for net salary of 100,000, what would be the qualified loan, repayment period and amounts, assuming I don't have other obligation. Hana madeni ingine, sijui chama, sijui sako, sijui what. All right, so huyu ni mtu ambaye after kila kitu imekatwa anabaki na 100K.
Okay.
All right, thank you Mumo for that question. Maybe we can start there.
Yes.
Yeah, and I can see time is really moving. Yo.
Okay.
All right, so let's start with Mumo. 100K net.
Yes.
Anaweza qualify for how much?
Okay.
Na analipa payment period and amounts, assuming I don't have what? Other obligations.
We will not be doing the calculations here, Mumo, just to tell Mumo that yes, what we consider is that net pay. So how much can we commit? Because we don't want to commit 100% of your salary. Otherwise tutakuacha bila kitu.
True.
Na hiyo itakuwa mbaya. So we are saying the much we can commit is up to 60% of that salary. But it depends na Mumo ako employed wapi. Sometimes your employer will determine how much you can commit to one's loans. Yes, employer kwa kwambia hapana. Because of the kind of job we do, there is a status. So the much we can commit is 30% of your pay. So if that is what the employer is saying, that is will commit.
Also inakatangwa direct.
Kuna hizo zenye tunakata direct na kuna zenye tunakata from my account. So that's what I'm saying, depends with the employer, that's number one. But if he is employed in companies we don't have MOU with, we call it an MOU. So MOU ni mahali tumeagree na employer that tutakuwa tuna finance watu wake. Sasa employer na sisi we will agree how much can the employee commit towards getting a facility, a mortgage with Co-bank. But if you don't have an MOU with them at all, up to 60% of your net pay is what we will commit. Meaning, what we are saying is, committing inamaanisha 60%, which is 60,000, ndio utakuwa unalipa nayo mortgage kwa bank.
But is it a must? Can I come and tell me I'm willing to commit only 20K?
Yes. Sasa naambia kama hiyo ndio net yake. Maximum sisi tunaweza commit, the maximum is 60. But you can choose 20, 30, anything.
Okay.
So from there we will calculate now what is the mortgage amount that you will qualify for from that repayment amount.
All right, great. So that's also a conversation needs to further with you, but you're okay with me telling you how much I'm willing to commit from my 100K and you'll give me a plan for that. Okay, Trevor, ule wa anataka construct apartments, hiyo loan mnaweza nipatia, mnaweza mpea mortgage ya construct apartments, that has to be multi-millions. Then the bank takes some percentage of the rental for a certain duration of time, especially when you finish repayment.
Okay. Yes, we could.
Okay.
But we are not considering only the rental income that will come from that facility. If you look at the kind of rental income that you get, it might not be able to pay your facility. So what we do, you must have some income today.
Besides the rental.
Let Trevor understand that today he needs to have some income that's coming in. So from that income we determine how much can he commit. And from that we can say we want to project part 3. The income yenye tukijenga hii nyumba ikiisha tunaweza pata, maybe it's a rental apartment of 500,000. So we can commit part of it. Because we are not sure if you build today that the houses will be fully occupied. And so we will commit part of that rental and then combine with your income that you're earning today. So key thing, you must be earning some income.
But does that fall in those people you called the corporates? Because
not really.
As a young person, mtanipea pesa ya apartment, ni construct.
Unajua inadepend ni apartment gani Kuna nyumba utasimamisha hata ya maybe 10, 15 million. It will be there. You can be doing rentals which are not necessary even going up.
Naweza target karibu na kampo mahali.
Yes, unaweka tu bed sitters hapo ni nini. So basically, usione kama ati muyouth haizi fanya apartments or things for rent. But we must have income today.
Besides the rent, the residence or
so we are not basing it on the rent alone.
Right. Okay. So now I want you to talk about interest.
Okay.
There are a lot of questions on interest.
But before then, we could answer the
microfinance. Okay. Yes, so alikuwa ameuliza if I work in a microfinance.
So yes, we could. But you see, what we are saying is, you might not be able to change your pay point from the microfinance. But you need some commitment now to undertake that. You will be paying us. So yes, we will be able to consider them because there are some employers who will not allow you to change your salary from here. So we don't lock you out. But it's on an exceptional basis. But yes, we can finance.
Okay.
Yes.
Great. Now let's talk about interest.
Yes.
We have about 10 minutes.
Okay.
And I know this is the number that changes everything. Mtu anasikia ile interest naenda kuchajiwa for that mortgage. Wacha ikae.
So, interest rate.
Yeah.
This is the cost of borrowing.
Okay.
The actual cost now. We talked of the cost of buying a property. Now there is the actual cost of the loan that I'm giving you. So interest rates is the cost of borrowing. And now, as I mentioned, we have, let's get to a fixed interest rate, the types. We have two types where we have a fixed rate and a reducing balance rate. You can call it a floating rate. So let's start with the fixed. The fixed rate means I'm giving you a loan of, let's even say 1 million.
1 million.
1 million. And I've given you a period of 10 years. Then what it means is I'm giving you a loan of, and the interest rate, we have talked of the loan, we have talked of the period, then let's get to the interest rate. Say even 13%, 10%, hata tuweke 10%. So it means, tumeweka vitu tatu. Loan amount, loan tenor, and the period. And the loan and the interest. Vitu tatu.
So the loan amount is 1 million.
Yes.
The duration is 10 years.
Tujipee interest rate hata hiyo KMLC 9.5%. Now, fixed rates mostly are not, they are fixed. That's what we mean. It's just fixed. So I'm giving you a loan to pay a fixed interest rate for a period of time.
So 9.5% of the 1 million.
Now, for 10 years.
So, ebu tutoe hii 0.5, tuseme ni 9%, ndo tufanye hiyo hesabu hapo.
Tuweke 10.
So, 10% of 1 million, sindio? Hiyo ni how much?
That will be 100,000. 100,000, 10%.
10% of 1 million is 100,000,
Yes.
sindio? So, hiyo ndio interest.
So, for the loan tenor.
For the 10 years.
Yes. So, it will be how much?
So in total nikimaliza hii deni yangu nitakuwa nimelipa 1.1.
Hiyo ni kama unalipa within 1 year. Ukilipa within 1 year, remember tumesema 10 years.
Yeah.
So hii 1 year utalipa 10%, which is 100k. So if it is for 10 years, it is how much? It will be 1 million.
Yeah.
So I'll give you 1 million and you pay an interest rate of 1 million because that is the tenor we have agreed. Tumeelewana?
Yeah.
Because what it means, pia ile repayment, nikipea 10 years, repayment will be very, it is just
kidogo.
Yes.
Yeah.
If I give you 2 years, then you will pay very little interest, but a very
Miss Jela, because then where is your money? Kama nalipa 1 million.
Unalipa then utalipa 2 million. The principal you borrowed.
Oh, so mbona unasema na
the principal.
So, gani hivi nashindwa.
The principal you borrowed 1 million.
Okay,
na interest ya 1 million. Remember I've given you time.
Na venye umejitetea.
Hiyo ni fixed interest rate.
So in short ndakuwa nimelipa 2M.
Yes.
But within a period of 10 years.
Of time, of course.
Na kama ina float yenye si fixed.
Yenye si fixed inaitangwa reducing balance. Now this is where most mortgages lie on. So we don't really have mortgages running at a fixed rate because it is very expensive. That fixed rate, if it's because a mortgage has a longer tenor, mostly it will be very expensive for you to pay a fixed rate. So let's get to the reducing balance. Reducing balance means I borrowed 1 million for 10 years, which is 120 months. Sawa? Month 1, nalipa, there is a repayment that I'll give you. Hiyo repayment inakuwa na interest na kitu inaitwa principal. Nilikopa milioni 1. So kwa hii repayment nalipa every month. Say ni 20k. Tuseme unalipa 20k every month. So kwa hii 20k kuna principal component yenye inalipa the principal I've borrowed na kuna pesa inaenda kulipa interest.
Okay.
So kama tuseme month 1 umepunguza loan na 10,000. So itakuja
990,000.
Inamaanisha next month ukilipa loan, interest yenye utalipa itakuwa ya hiyo 990.
Oh, si tena ya hiyo 1 million.
So ile nyingine ulikuwa unalipa ya 1 million.
Through.
Hii nyingine inaenda ikipungua. So that's why the mortgage, that is the kind of interest rate we offer. It is good for you as a customer.
Inaenda ikipungua.
Yes. Okay. And now when we get back to KMRC, the one that we mentioned, it has a fixed rate. Fixed ni kusema hii later haitawahi change. Unaelewa?
Yeah.
Then ndani yake iko na reducing balance, which is now very good for you. Inakwambia even if the markets forces of demand and supply changes,
Yeah.
and other loans interest rates change, your mortgage will remain at the 9.5 interest rate, but it will be on reducing balance.
So it's a fixed rate that
Yes.
you're paying, but it's on reducing.
Balance.
Ukipunguza hii month,
inaenda
next una...
ikipungua. So that is why that product is very, very good for our clients.
So going for the option of reducing is better.
It's always better, and most in the market you won't really find a mortgage which is on a fixed rate yenye inakwambia yenye ulikopa unalipa interest. Like, it is very rare for you to find that.
Okay.
Yes. There was a question.
Yeah. So I want us to go back to the question. Yeah, mwenye alikuwa ameuliza about the interest rates. Kama so maybe they'll put for us the questions back on. But as we sort it out and get there, what are those? Oh yeah, we actually have it. Can interest rates increase after I've already taken a mortgage?
Good. I think now that what we've just explained will really answer this. We are saying for mortgages, if it is now this one for residential purpose, KMRC specifically, it will never change. It will be 9.5 on reducing balance. But now, for people who are doing the commercial properties, we are doing warehouses, person doing a church, the person doing rentals, the person doing anything business that is getting you income, then that interest rate is bound to change. If it is on, because it's on reducing balance, so it will be affected by the forces of market, demand and supply. Yes, but you will always be notified by the bank prior.
Okay.
You will be given a notice 1 month prior. Yes.
A common mistake we make when first-time buyers or when you're going for mortgages?
Well,
Kama young people?
Maybe the most common mistake is you come to the bank and ask, how much do I qualify?
That's a mistake.
You see, I mean, not how much I'm qualified for. Yes, how much? What is the maximum? Not how much.
Oh, what is the maximum?
Yes, sorry. Yes, what is the maximum I qualify for?
Okay.
Unaona?
Okay.
So unataka kucommit your whole salary, whatever match you can qualify for.
Okay.
I would say, if you ask such a question, yes, I will tell you this is the match.
Yeah.
But the question is, have you considered the costs, the other costs I mentioned?
Yeah.
And how stable are you in case of emergencies and anything that happens between?
Yeah.
So I think the issue here is first consider everything.
Yeah.
Everything that is involved. I mentioned of the costs. There is that interest rate bit of it. Where am I buying the property? Is it for business? How much is it going to raise as rent? So before I come to the bank and say, I want to commit all my pay, I should have considered everything else that I need to take care of before even I pay this one.
Right. So the maximum that I can get doesn't mean that is what I should go for.
I wouldn't really advise for you to go for that.
Okay. The other question then becomes, should I then get a home to live in or invest?
Well, it all depends on your priorities today.
As a young person,
yes,
niko 24. Ni lazima nikuwe na home yangu ama ni rentishange nikipiganga mabizi?
Tujiulize, number one, nalipa rent pesa ngapi mimi?
Okay. Kama
nalipa 30k na naweza pewa mortgage yenye nalipa 18k, which is there. Na naweza pewa mortgage na nipate nyumba yenye nalipa 28k. Kwa nini niende ku rent?
Okay.
That's one. Pia, I'm looking at, kama nataka kuinvest, yes, you can invest. But the question is, what is it that I'm getting from this investment I'm doing? Is it worth the hassle?
Yeah.
Comparing with the loan repayments that I'll be paying, can that really be compared? Like, can I compare the rent? I need to compare rent and the mortgage repayments. And when I own this house, there are other costs with the ownership. You do renovations, you'll pay for water, you'll pay for electricity, those things. So I need to consider all those things as I get into this investment. So you can invest, yes, today, because you could also buy one, and it depends on your income.
Yeah.
You can come and I'm telling you, you qualify for 5-10 million, and you would opt to just live in a studio of 3 million and buy other 2 studios, which will help you pay the mortgage.
Right. Okay, so in 20 seconds, tell us why your credit history is very important. Kama nilikuwa na deni ya 500 nikazungusha hizo digital apps, itaniharibia my chances.
Yes. So credit history is very important.
Yeah.
You need to be very disciplined in how you're paying your facilities. Whatever amount you buy, you take as a loan, whatever it is, you need to consider repaying it, because when the bank does something we call risk rating, we are rating you depending on the risk How risky are you for me to give you my money as a bank? So the credit rating will be very important, a very important consideration towards giving you that loan facility. So if you have some borrowings, you need to organize yourself. It doesn't mean you will not qualify if you pay, you borrowed a loan and you didn't pay, but you need to repay it and consider all the other obligations that you have, ensure that all of them you pay.
All right.
Yes.
Maliza kwa kuongea na the youth directly, wale ambao wanakusikiza zaidi, wapatie tu a heart to heart about home ownership and mortgages.
Thank you. So home ownership and mortgages, it is the right time for you because you have a lot of time. You know, we are saying the loan is running for 120 months, 25 years. So you have the time and you can spread the repayments for a very short time. But before you get there, you need to consider very important things. How much am I earning? What is my income today? Number two, how much am I willing to commit towards that loan, towards that or getting that loan facility? Number three, what are the costs that are coming with me buying the property that I want to buy or the constructing the property I want to construct? Number four, have I saved enough in terms of my emergencies and any costs that will come with it? Do I have those costs with myself? And number four, how secure is my job? How secure is my business? In case something happens to my business, will I be able to continue repaying that facility? But I want to welcome all of you to our cooperative bank, branches. You can visit any of our branches and you get the advice that you really need in terms of mortgage, financing. So just visit us and we will be able to give you the best advice for that. When you're investing in properties, then you are sure of what kind of properties you're investing in. And again, just to remind you, you can get all the listings of our properties at our website, the Coop Bank website. You're able to see the kind of properties we have that are already vetted by the bank and that you can really buy from. Thank you very much.
Thank you, Ivan.
Yes.
I think I'm convinced. Maybe I'm going to be your next client after this. Tuongee, you might attend. But I hope young people have learned so much about mortgages. Thank you for breaking it down. It sounded very simple and digestible. And tumeona manyumba si zile za 100 million peke yake. Kuna affordable homes that young people can start with as they grow. Sindio?
Yeah.
All right, thank you so much. Always a pleasure being here with you every single Friday. Tutakutana tena next week with a lot more here on our weekly youth webinars powered by Co-op Bank. Until then, have yourselves a fantastic weekend. Goodbye.